we're gonna be talking today about the hottest markets and how anybody at any starting point can start building a real retirement in a real estate portfolio. So make sure you don't miss this one. Alrighty guys, so Kris Krohn back at it with me here in the studio.
Dude,
this is gonna be the one, right?
Yes.
So this is the one where we're gonna start talking about actual markets. We wanna get into how did you go from nothing to a 4,000 person buyer, right? You got your hands on 4,000 different deals. You're the guy that's doing the hard work for folks that are uneasy about real estate. So real estate can be super scary. I get nervous about real estate. I was checking out a property this last weekend. I'm in love with this place, and yet, there's still this trepidation, even when you're making a lot of money, that it's like, man, am I overextending myself here? Yeah. And how do I actually get the finances in a place where I can feel safe and it's a more balanced approach to taking risk to being conservative? Because being conservative is never going to end up getting us to wealth, right?
Totally.
We can't just sit back and invest in the 401ks and the IRAs. We've got to actually go out there and do something that produces returns that really hedge us against inflation at a minimum, right?
And let's actually take a really backward approach. See, here's the reality. Most people are out there trying to crush it in real estate as a mom and pop shop operation.
True.
And here's what they don't understand. You're wearing a dozen hats. All of a sudden, you've got to be the expert of picking a market. And by the way, your best market is usually not your backyard. I track 324 markets that make up the United States. And the reality is, if you look at all the macro and microeconomics, there's 3 or 4 winners that are heads and tail above the rest. But most people don't do that. They just kind of go right into the backyard. And for a long-term play, you're going to strip yourself out of half the potential earnings just because you're being mom and pop shop. So you're not going to go usually out of state. It's really uncomfortable. You're going to play property manager. You're going to play rehabber. You're going to play all the different roles. You're going to vet your tenants, and you're going to be the one to find the deal and underwrite the deal, and then try to get the mortgage in place. And when you're coordinating all that, all you have to do is mess up one thing to have the whole deal go to pot. I mean, that's my experience. It's like,
what is it? Is you fly back and forth? Personally, I don't buy out of state.
Most people won't, because they don't actually to think about the cost of a plane ticket. It's more than the cash flow that you're gonna make on the property.
That's exactly right. I mean, one ticket, if it eats up 2 months worth of cash flow,
it makes no sense.
Why am I doing this?
But then you know what they do? Then they make the novice mistake of hiring a property manager. And guess what? Property manager don't care about you. What are you? What are you gonna be, like 10% of gross rent, $100 a month? You know how much loyalty you can buy for $100 a month? Nothing.
Yeah.
So I've learned that the only way to win is bulk. You've got to play the game in volume. And that's how Walmart wins. That's why they're a multi-billion-dollar corporation. And what we've done with transacting now $1 billion worth of real estate, Matthew, is we've learned that first, track all the markets, select the most intelligent market. So I can tell you right now that currently, as of this video being created, that the #1 growth market in the entire United States are a number of counties in the heart of Florida.
Really?
I can tell you that the greatest cash flow opportunities are right now in Indiana, in Indianapolis, in Indiana, and I can
Indianapolis, it seems hot, man.
Memphis, if you're on the right side of the railroad tracks, is amazing. The wrong side of the railroad tracks, it's a nightmare. And so you actually have to have boots on the ground that understands literally all the microclimates.
So that's exactly what you guys are doing, is
Yes.
you're putting the boots on the ground in those areas?
Yeah, so in this document that anyone in the link below can get for free that documents this entire strategy,
I was thumbing through that thing, it's incredible.
Yeah, thank you. One of the things that we put in here is we talk about the top-down macros. And so most people will evaluate whether a deal is good based on the house. I don't look at a house until I've done all my macros. So my macros, for example, I look for an area based on population growth, affordability factors, employment growth, wage growth, supply demand, business growth, household formation, and migration. When you actually look at those key factors, when those 7 line up and reveal the very best markets, you're gonna double your ROI. So right now, I make 10% a year on my money just by being in a specific zone. So when they say location, 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 I mean that, but from a nationwide perspective. But then that's when we dive in and say, okay, now we're gonna own the auctions, the MLS, we're gonna use about 17 different methodologies, and now we're going to find the very best deals. And for me, my zone is single family homes, entry level, 3-bedroom, 2 baths.
Average price point.
Newer homes. On the last 2,000 homes, we're averaging at $142,000.
So relatively affordable.
It has to be for me. And the reason why is because I want my partners to actually max out if we're using their credit on buying 10 homes. And once they've done that, we bring in other credit. And a lot of people criticize me. They said, well, Kris, why haven't you graduated to apartment complexes or bigger commercial deals? And while I've done some of those, the reality is for me, the common denominator comes down to one thing: ROI. So my average ROI on my last 2,000 deals is 25% even, dead even. And 25% means that with Rule of 72, I know that my money is multiplying every 3 years. It's doubling. And what that means is that when someone works their butt off, Matthew, to put money in a 401k IRA or home equity, and it's like, okay, that's all you have after these decades of working your butt off.
Yeah, it's depressing.
You got to do something that makes sense. And so here's the cool thing. When you buy a property or 2 or 3, and then they double in 3, 4, 5 years, and then they double again, all of a sudden you start feeling like a winner.
And that's really the concept that I grabbed onto the first time I met you was, okay, you've got this idea that 3, 4, 5 years from now, we're splitting this one property into 2, right?
Yes.
3, 4, 5 years from now, we're splitting that property into 4.
Yes.
Those 2 properties into 4. Everything just keeps splitting off and doubling.
Which isn't exciting the first decade. But the second decade, no matter how small you start, it becomes thrilling. And you'll get to a point where your income off of your homes is greater than the money that you're earning. And it's like, wait a second, I don't have to work anymore. And there's that financial freedom moment. And that comes with this.
So let's get into the meat and potatoes of I want total transparency with my audience. One thing I don't want is to sort of keep this veil over what are the costs involved, how do we actually package this out.
Yeah.
Tell me how you're partnering with my audience. How does my audience actually work with someone like you that can get these deals done?
So, on my channel having 500,000 subscribers, I only think I really got there because of transparency. So like in this document, when you download and get it for free, you're going to see that on every deal.
Dude, I like that. He literally lists every single property address that he's done in here by year.
Yeah, and if you actually look at the perform on each property, we literally, over a tenured spectrum, we break everything down, even down to simple things like deferred income that comes from principal buy down.
Wow.
Eventually that's a piece that's going to come back. So like this first property, dude, this guy in Florida right now, the cash on cash is 7.17%. The cash on cash plus appreciation is 11.6. That's with principal reduction. But then when you add in the appreciation, you're sitting at 32%. And
you cannot lose if you're averaging 32% ROI.
Cap rates, all the numbers, everything is in here. In life, there's no guarantees.
Of course.
But the reality is when you have this average price point of $142,000, here's really what it comes down to. When people partner with me, what they do is they value my experience level and they say, all right, and this is how my very first partnership started. It was with my father-in-law. Dude, I had bought my very first property and I didn't know what I was doing and I was nervous, but I slayed it on my cash flow. My father-in-law was totally skeptical. I bought my second home. He thought we were getting a divorce. He's like, dude, why do you need 2 homes? I bought my third house and he's like, you guys are crazy. But when I bought my fourth, I didn't have the money for it and I had been bootstrapping myself. And he finally got curious and he called me up and he's like, what are you doing? And he crunched the numbers on my 3 homes. He saw how much money I was making and he's like, I'll give you the money for this 4th deal and we'll split it 50-50. Dude, I was thrilled.
So that's how the concept was technically conceived, if you think about it, right?
On accident.
Accidentally. Right?
What it felt like. And I remember when I bought like 5 or 6 homes with him, I was sitting now at 10 homes as a senior in college and I'm like, dude, I got to get to 25 homes. How am I going to do that? And I'm like, I need another father-in-law. I'm like, I don't know how to get another father-in-law. I don't know how to make that happen. So I decided, you know what? There's father-in-law type people out there.
Right.
I found there are 4 people in my community that have been kind of tracking me a little bit. They're always curious about what I was doing. I sat down with each of them individually at lunch, and all I did was show my track record on my 10 homes, and all of them were like, this kid's kicking the trash out of my 401k IRA. So it was their bright idea. We'll put up the money from their 401ks IRAs, and then we'll split profits 50-50.
Well, you do the work, right? You've got all the knowledge.
They love
You've
that.
got the data.
Yeah.
So it takes the heavy lifting away from the money partner.
They love it.
The money partner
Yeah.
is how you can supplement the need to just finance these deals, and ultimately everybody wins.
Well, think about it. If I'm doing 25% ROI today, then when I double my portfolio, I'm now earning 50%. When I double it again, we're doing 100% on the original dollars invested, then 200%, then 400, and then it gets stupid. And so I love the partnering concept. So to keep it fully transparent, People that like what we're doing here, they would go to the link, they would say, hey, I want to talk to your team, give me a game plan. My team will actually say, hey, we're only going to work with you if we can show you how to buy real estate. And once they reveal how that happens, regardless of whether you have good credit or bad credit or where your money is stashed, most people walk around thinking they have no money, but they've got hidden assets, right? 401ks, IRAs, home equity, things like that, annuities.
Debt weapons, folks.
Debt weapons. And I love that, by the way. I'm gonna give you credit and keep using that.
Perfect. I don't mind.
And so what they'll do is we form a partnership, and they never give their money to me. I'm helping them buy the home, but my team is doing an average of 342 hours per project.
Okay.
And that's just up front to get into the house and make sure that it was done thoroughly. Most people aren't putting in anywhere near that level of time, and that's why they're not getting that level. That's why they're not getting the deals. I comb through thousands to find a handful of winners.
So basically they have the option between several different packages, right? How many properties they want to be buying.
How many homes they want to buy. And then ultimately it gets to be better value the more homes you want, right? Yeah.
And then if you want unlimited homes, it's going to cost, the most expensive package is what, 25 grand?
Yeah, $25,000 if you want to basically buy an unlimited number of homes for life and continue building into the 1,000%
And have you guys
ROI.
as the partners, right?
Yeah.
Okay.
So there's different ways and ways for people to participate. So they look into it, they find out what they really want to do. We're vetting them to find out they would be a good partner. I've had to axe a couple of partnerships in the last couple of years that just weren't a good fit, because what we're doing is we're helping really people build their long-term wealth. And so people will actually come out to the events that we host, and we give them the training on how to think like a millionaire.
Is that part of it?
It is. The mindset training has to be for me.
So it's included. It's included with the package.
It's all included.
Man, and when you guys get to this space, so we're in the building right now. It's unbelievable. I mean, you will get in here and immediately start feeling a transformation starting, because the mindset is such an important part.
It is.
And Kris did this for a while. I mean, he ran a company that was branded Limitless, and he crushed the mindset stuff. He is a true expert on getting people into the mentality necessary to succeed when it comes to real estate or really any business venture at all. But beyond that, you're there essentially holding their hand and helping them all along the way in order to get the long-term buy and hold residual cash flow stream built for life.
So we're basically finding out if we have a fit. So if people are curious, they go to the link in the description and then basically sign up for a consultation. They get this document for free so they can start doing their due diligence. A lot of them will hop on my YouTube channel and start watching videos. I've got 1,000 of them out there like you.
It's insane, man.
And then
you put them out every day.
We're daily right now. Whew. Actually, I think we're 12 a week right now. So we've upped it a little bit.
Man.
But we're certainly making sure we help as many people as possible, because not everyone's a good fit for this. A lot of people, they want the knowledge and they're going to go run. But
so we turn people away easily. In fact, we're more likely to turn people away than to let them into our coaching.
Yeah.
Can I trust that that's the same thing, where there's this honor system of saying, look, this is not about volume for us, because if it's not a good fit for our coaching, for instance, frankly, it's a nightmare for both of us. It is the last thing from worth it for us to convert somebody that's not a good fit.
And I think it's important to understand this isn't a coaching program. For me, I only have a limited number of deals. Right now,
how do you decide who gets a deal once you find a great deal?
Okay, so this is a really good question. If I were to take the 50 deals that we do this month and I were to lay them all out in front of you, you'd say, Kris, in Florida, all of your ROIs are almost identical. And that's because our box is so narrow, or my cash flow markets, the box is so narrow. So I have such strict criteria. I only present what I want. And that's what I'm buying with my partners. I'm buying properties that I want to buy. So if you were to look at 10 of them, you would have a really hard time picking a clear winner, because they're all so homogenous. That's by design. I just have crazy strict standards. We miss deals all the time because we're so aggressive in what we get. So the 50 deals we do this month, I've got capacity to take on right now a handful of partners with you. And so what that means is I only want the partners that we know we're going to slay it with.
Right.
The people that are going to have a good experience. So when my team does that, it's really kind of a two-way interview. When they call and you get this download in my team, what they're doing is they're building a game plan saying, this is exactly what's going to happen. This is what we would do. So you're already looking at and determining whether you like it or not. But at the same time, my team knows exactly the mentality and mindset I'm looking for, because I've got strong standards, and they're all trained in my breakthrough techniques and technology. So they're really vetting people whether they're going to be a good fit. If we have a good fit, we're going to play and we're going to have a rockin' time. That's just the reality of how this goes down. I don't have enough properties to let everyone in and play. Nowhere near. So we have to be selective.
You know what they call that? They call that the Perry Mason effect. Remember that guy on TV when we were growing up? Perry Mason? You know, he only took cases he could win, man. It was just, it keeps your reputation great, keeps everybody on the other end happy.
Yeah.
So that's how we choose to do it too. All right, well that makes a little bit better sense. I mean, I think that's one of the biggest things that I would always have as a question mark is, how does economic fluctuation change availability and the marketplace based on your criteria? And is there a point in time where you don't have enough inventory to meet the buying goals of the partners that you've picked up on?
So this is a really good question. So here's the reality. I was doing this in 2002. I was doing this in 2008. I was going nuts in 2009, 10, and 11 when everyone was losing everything. I mean, it was just such a season of winning. And so one of the things that you'll learn in this document is we'll talk about the cycle of real estate. And while we can't predict exactly its movement or when it's going to happen, the cycle is always the same. It always goes spring, summer, fall, winter. The seasons never jump around. They do in the stock market. They certainly don't in real estate. And we've played in all the seasons. And we're playing in all of them again. And so right now, this strategy is so recession proof that we know how to crush it when the market is hitting its peak. We know how to crush it when the market tanks. And by the way, we're not. And when the market's recovering, we're crushing it. We're just always crushing it. Like, that's what
Don't you guys wish you could go back in time,
dude,
and do what you're talking about now?
I do in 2008.
Back in 2010, 11, 12.
Dude, if I had $1 billion fund, I would just be buying up, according to my system, everything cash back in the Phoenix and Vegas and
You thinking about putting a fund together?
So actually interesting you asked. One of my mentors, he's got a fund with $1.6 billion. And before that, he did 27 years of what I'm doing. And he said, Kris, having done both, and he evaluated what I'm doing, he says, for me, and there's a lot to the story, but at the end of the day, it was, don't put a fund together. And the reality is, I like managing my individual partnerships and helping people grow their wealth. I'm not interested in the institutional approach of never connecting, never knowing who's who put money in or why or how much. For me, it's a personal touch, and I built my whole system on it. And so my wealth grows as I help people build their wealth. My partners, when they come out to my event, I know them by name, we connect. My team just pampers them, gives them exactly what they need. So to date, I have zero plans of ever opening a fund. It's too impersonal. And at the same time, I mean, how much do you really need to be successful? I'm maxing out my system with people that get it and want to win.
Well, I think that's super important.
And I can help them make more money, Matthew, than they would ever get in a fund.
Okay.
And so at the end of the day, if I really want people to win the most, this is the approach that does it.
I think that's great. And guys, this is not going to be for most of you, period. Because most people can't get over the hurdle of spending $25,000 to partner. How much have you spent?
Or $10,000 or less.
No, exactly. I mean, that's the most expensive one,
Yeah.
right? But I mean, how much did you spend to be in the Lions group with Tony Robbins?
Oh, I mean, to date, I've spent well over $2 million. Last year, I spent $350,000 alone in mentoring, coaching, and continuing to level up my game.
And see, that's where I'm at as well. I just drop money, and I don't even think twice about it. And I surround myself with people. I'm connected with a whole handful of people you probably know in that mastermind group with Tony Robbins. And man, they spend massive amounts of money. I'm talking 6 figures for 1 year worth of masterminding with that guy.
Yeah, but you know what? The returns.
Exactly.
For people that are applying, the returns are crazy.
And that's the point, guys. If you can't get past investing in yourself and in your network and in your mentorship as an apprentice, it's just not going to be a good fit, and that's okay. You know, I'm not going to judge you for it, but you also have to understand that that's how people like us take it from this level to this level. So, you know, give it some thought. We can help you guys find the money to get involved, okay? It doesn't have to be cash in the bank that you fork over. It can be a debt.
It rarely is.
Right. What happens if I were to get you access to a tool that you didn't have access to yesterday for $25,000 and it costs you $500 a month? You telling me you wouldn't spend $500 a month to service that tool in order to go out there and make $1 million next year? Guys, you're thinking too small. So, step 1, check out the description below. You're going to want to make sure you get both links. Number 1 is going to get you tuned into this here. Okay, this book here is going to get you all the information to show you results. I think the numbers speak for themselves, right? Check the scoreboard. Number 2, I want you to go in and hit the link to kriskrohn.com/VIP. That's kriskrohn.com/VIP. That is our partnership wealth division. That is going to lead you guys to a page where you can start to explore linking up for a game plan session. this is a no sales, no deep solicitation, no hard call to action, guys. If you guys are not
informing,
this is simply giving you answers to questions you may have that are lingering around to decide, hey, when would make the best sense to start exploring and really pursuing and taking that next step towards a partnership with Kris and his team. And his team is phenomenal. I met these guys today. This is a legit operation. Any question marks that I had lingering in my mind have certainly been answered so far. If you guys were in my seat right now and you had taken the tour that I took earlier, or if you had been to Kris's house like I was even just 8 years ago, guys, you were blown away. I mean, and I've seen your new house, man. I've seen it on videos. That place looks sick.
Thank you.
Sick. So guys, do what you want to do. It's not about money, it's about lifestyle and it's about freedom. Yeah. That's what you're here to learn on this channel. Make sure you're a subscriber if you're not already. Grab those links in the description below right before you drop a like on the video. And until we see you on the next one, make it a great day, guys. Take care.